Welcome to the 24th episode of Renegade Marketers Live, a show that promises to be long on marketing insights and short on overhyped buzzwords. We'll be drinking in the latest tactics and the coolest gin. Yep, this may be the only live marketing show that also features a gin tasting. This show is being live streamed via our friends at Restream, and if you want to drink along at home, today we're tasting Tanqueray and Empress 1908 gin. I'm your host, Drew Neiser, live from my home studio in New York City. Perhaps as a marketer, it is your dream to be at the helm when your company goes public. You might think this is a highly unusual scenario, but I looked this up. Thus far, in the first 9 months of 2021, there were 770 IPOs. It's incredible. And if you add in a couple hundred from 2020, that's over 1,000 IPOs. So with so many IPOs, you might wonder how you get in that position in the first place. What sacrifices, if any, do you have to make along the way? What the heck do you do in preparation for an IPO? And what changes in the role of the CMO after going public? To answer these questions and more and taste some gin, we've got a superstar tandem of CMOs, Noreen Allen and Kevin Spurway. And with that, let's bring on Noreen from CMO of Bandwidth. Hello, Noreen.
Hey, Drew. Great to be here with you today.
Hello. Oh, there you are. Okay. How are you?
Hey, Drew. Doing well. Doing well.
So first of all, where are you?
So I'm in Raleigh, North Carolina.
I knew that.
Yes.
I knew that, but that's cool. Okay. So let's go back a little bit. You started at Bandwidth almost 10 years ago. And when you started, did you have any inkling they would be going public?
Well, I certainly hoped so. I hoped that would be part of the plan at some point, but you never know. You never know if that is ever going to become a reality. But yeah, that was something that I was hoping for when I was evaluating the company on the front end and before I joined.
Well, and that's interesting because so you were hoping, which means that maybe that it had to do with your compensation package, that you went into this maybe, I mentioned this notion of sacrifice. Was that part of your calculation that if they did go public and, as part of you taking the job?
Yeah, absolutely. Absolutely. So before I take any job, I'm always looking at the long-term potential for the company. And I want to make sure on the front end that the company's got great product market fit and that there is the potential to really grow the business and whatever that might mean, right? Like it could be IPO, it could be strategic M&A activity, it could be global expansion, it could be all of the above. But going into it, I wanted to be part of a growing business and a business that was going to do really well. And that would then translate into more opportunity for me. So that's part of the evaluation process for me on the front end to make sure not only is it cool product and fun company and good culture, but I want to make sure that the ingredients are there for that long-term potential.
Right. So there's a big reward at the end of all the hard work that goes into getting there. So, again, help us understand at what point did you learn this was going to happen? And, how did you feel? Because this was your first, right?
It wasn't actually.
Oh,
no.
Okay, good. Okay. That's excellent. Okay. You had done this before. Where did you do it before?
So a company called SpectraSite Communications. So SpectraSite went public twice, actually, first in 1998. And then company grew, expanded quite a bit. And then when the market collapsed after the whole dot-com bust, went through bankruptcy, and the company was in and out of bankruptcy in 80 days. And then we came out again and were listed on the New York Stock Exchange. And so and that was in 2002. So yeah, SpectraSite IPO'd twice on two different exchanges.
And was that, do you think when you got hired at Bandwidth, the fact that you had been at a company that had gone public, was that part of their thinking and bringing you on?
I think it was. I think it was not just the IPO piece, but it was the prepping growth stage company for that next phase of growth. And so whether it was getting the company ready, building that revenue engine, positioning the company the right way to attract funding and to really scale the business. And so I had done that at 4 companies before Bandwidth. And so I think the experience of having done that, the fundraising, the strategic M&A activity, the global expansion, and the prior IPO prep experience, I think that part was certainly attractive as Bandwidth was thinking about me as a candidate.
And all these things sort of go together, because if you're not going to go public, you're probably going to be raising money if you're in that growth trajectory. So at what point did you learn that that you were going to go IPO?
Sure. So Bandwidth went, and just for a little context for folks, we're a communication software company. And if you've heard of Twilio, we're similar to Twilio. We went public in November of 2017. And we started the process probably 2 years prior. My work started in about 2015 as we were evaluating various different paths for the company, including going out and raising money, doing some M&A activity. But my work really started with strategic positioning. And it was really looking at the broader category that we were in and carving out a position for Bandwidth within that category, a unique position for Bandwidth, and then getting out and educating the market on that story. And so my work really started with the industry research analysts, and it included all of the big names that we all know of, the Gartners and IDCs and Forresters of the world. But also there are a number of smaller boutique analysts, like more sort of niche independent shops that are really influential with the investor community. And so we spent a lot of time getting out and educating that analyst community about our position within the market and really carving out that unique position for Bandwidth, then getting out and validating that position we'd have the analysts work on collateral pieces or do webinars and different things, white papers to support our position within the industry. Then you started to see the industry trade press talk about Bandwidth and talk about our position within the industry. So then it made it a lot easier when we started reaching out to the investment banks, which was very early 2017. We started reaching out to them about the potential for IPO. They go right to the industry analysts to better understand the market and to better understand our position within the market. So all of that work we had done the 2 years prior really started to pay off because they understood how we fit. And then you fast forward to writing an S1, and it's a heck of a lot easier to talk about your position within the market when it's understood and it's easy to support and easy to show that TAM and how you fit into it.
And so what's so interesting to me, so first of all, you needed the analysts to be sort of this credible thing, but you also had to go to these analysts and essentially market to them and convince them that there was some white space between you and a competitor, and that you were sort of, and so you had a luxury of time in that way to almost like build the brand that in a way that would be the most appealing from analysts to investors. It's really interesting. And I know when we talk to Kevin next, he didn't have that much time. So it'll be interesting to hear how he dealt with that. But okay, so you've got this, you went from analysts, then we go to the press, and then you go to the investment community. And talk a little bit about an S1 and what your role is in that.
Sure. So in the drafting of the S1, there are several different sections of the S1 where you're talking about your business, you're talking about the market, you're talking about risks that exist for the business. So my role in that was pulling together a lot of the market information. So information about the total addressable market for Bandwidth. What's the market we're going after? How is that market growing? Talking about the buyer personas that we're going after, all the different use cases that we have that represent the different unique segments of the market that we're going after. So we pulled a lot of that information together. Customer information, customer use cases were a big part of that as well. So there was a lot of material that we had been working on in advance that fed into that.
And who prepares that list? There's like a standard list that your investment banks just say, okay, you need all these things?
So, I don't recall that there was a standard list, but I'll tell you what I did a lot of in the lead up to this, because while I had been through the IPO process before, it had been quite a while and it's changed a lot over the years. So I spent a bunch of time going out and pulling down the S1s for all of the companies that went public in the year prior, and then companies in our category that went public in the several years prior. I pulled their roadshow videos. I pulled a lot of their material. I went back and looked at their website on the website time machine pre-IPO and post to try to see what were they changing. So I learned a lot through that. I wasn't really following a checklist, but it was just learning from what other companies have done. Companies that had successful IPOs, I'd go back and try to unpack what was it, what seemed to have worked here that resonated with investors, and tried to get ideas that way.
Well, I tell you, boy, if you actually wrote all that stuff down, that would be an invaluable little thing to be able to share among the huddlers who are out there thinking about going IPOs, because what a smart, now I know it's changed even in the last 4 years, and we have Kevin who will be able to talk about that, but wow, really smart. Do your homework, get to know what success looks like, and then try not to make the mistakes that the folks that didn't do as well. So, all right. So we get to November 10th, 2017, the day you went public on NASDAQ. Talk about that day and how you felt.
It was so exciting. It was such an exciting day. And I'll tell you, our lead up, it ended up being a very fast process. While we were prepping from a messaging perspective, we came out in about January, February of 2017 and said, we want to take a run, we want to take a shot at this. And it then went really quickly. Like, there are steps you go through in terms of working with the investment banks and everything. And so it went pretty fast. And right before you go public, you're out on the road doing a road show. So our CEO and CFO were out on the road for that, trying to generate interest and get all the investors on board. And so it literally, like, it comes down to that night, like the night before, you're waiting to see, is this a go or no go? And I remember there was another company that was supposed to come out the same day as Bandwidth and IPO, and they didn't make it. They didn't have enough interest from investors. Wow. And so it's very much this, you're not totally sure until that very last minute. So here we are in New York. We had a big group of employees that came in with family members, and we're all staying at a hotel in Times Square. And we had this big celebration dinner planned for Thursday night. The IPO was on Friday. Folks back in Raleigh had this big celebration planned in the office. And we had said to folks in the office, not everyone knew what was happening. They knew they didn't know it was happening that day. They knew we had filed the S1 and we're in the process. But folks in Raleigh, we said, okay, if we don't end up crossing the line here and we're not going to come out tomorrow, we will flip this celebration in Raleigh to be a Veterans Day celebration and breakfast. and people come in and see all of the balloons and breakfast and everything. But day of, when you're in Times Square, we're listed on NASDAQ, and NASDAQ does a fantastic job of just creating a really cool experience for employees. I'm sure everyone has seen, you do the Times Square takeover, and you have your logo all over Times Square. In fact, I've got a picture in my office behind me of the Bandwidth Times Square takeover, where you see the Bandwidth blue everywhere. It was such an incredible emotional moment. And when it represented so much work. The company had been around for 17 years at that point. But to get to that point and to be able to celebrate it with your peers and with family members, and to see it all right in front of you, to ring that bell and to see the logo all over in Times Square, it was so emotional. It was a really, really cool experience.
Yeah, it's got to be incredibly gratifying. And when you think about how many years of work that actually went into it, and you get to that last minute and it may or may not happen. Just for the folks, I don't know if we shared this, but you raised 80 million by selling 4 million shares, which is great. Okay, now we're going to switch gears and we're going to talk with bringing Kevin Spurway, CMO of SimilarWeb, who happened to be a star of episode 137 of Renegade Marketers Unite. Hello, Kevin.
Hey, Drew. It's great to be back with you.
It's lovely to have you here. First of all, where are you?
I'm in Northern Virginia, Leesburg, Virginia, specifically, sort of out by Dulles Airport, about an hour west of DC.
All right. All right. Well, we've got the East Coast contingent, if you will, on this Renegade Marketers Live. Now, when you heard a lot of what what Noreen was talking about. She had 2 years to prepare. Now, it seems to me when you joined SimilarWeb in September 2020, you didn't have that much time.
I definitely did not have that kind of time. From the time I joined to the time we did the IPO was, I think, 9 months. It was drinking from the fire hose type of a situation for sure.
And I'm guessing, but you knew that this was part of your being brought on, right?
I certainly had the idea, an idea that SimilarWeb aspired to go public. I didn't have really a clear picture of the timing coming in. And of course, as Noreen said, as you go through the process, timing is something that can change based on a whole variety of different circumstances. It's really go, no go, potentially up until the last minute when you actually go through that process and you see what the investor demand is. So yeah, it's something where I came in and found out very quickly what the timing was for the company, and then had to figure out how to dig in and drive a lot of change quickly.
Yeah, and it's interesting because, again, unlike Noreen's situation, she'd been there, knew the brand, had a lot of insights in it. You're new to everything, and it's, oh, by the way, we're going public. Now, I'm guessing that part of the reason they were attracted to you here was that you had been on the team that took Appian public, right?
Yeah, so we took Appian public in May of 2017. So about 4 years before SimilarWeb went public, I did the IPO at Appian. So I had been through that drill before, and had that experience fairly recently, which is a big help, of course.
Yeah, it's got to be. So you're not going, I don't know what I'm doing here. So you know what you're doing, and I know that. So Appian is a NASDAQ. Listed on the NASDAQ. SimilarWeb is on the New York Stock Exchange. Did that have a difference in the impact on your prep at all?
It did a little bit. So there are definitely some differences between the two exchanges in terms of what they offer in terms of the day of experience. But really, for me at least, the bigger difference between the 2021 IPO and the 2017 IPO wasn't the exchange itself, but it was the limitations around IPO activities due to COVID. And 2017 was a very different animal because you could really have a much bigger group involved. You could have that big company celebration back on the other end. It made it easier to kind of pull in certain resources. 2021, very different story. It was a very small group that was there. It was handled very differently. And there was a whole virtual dimension that actually both exchanges have kind of innovated in that direction as a result of COVID, and kind of created some ways to connect the employee base better into the experience through virtual means. So
talk about that. I'm interested in that because that is, it is a different experience than Noreen was describing.
Yeah, it's interesting in a lot of ways. I think the employee experience is more connected now than it was a few years ago, because they kind of had to, like I said, innovate in these different directions. They've got an app that enables employees to kind of like take a picture of themselves and digitally project the facade of the New York Stock Exchange with the banner and all of the branding. You could post it up on Twitter or LinkedIn. They've got they do a big, huge kind of live stream news show that gets streamed out to the employee base and literally runs for like 2 hours. It's kind of like the play-by-play of the entire event. And that's not stuff that they really had, at least in terms of the scope of it, back in 2017. So they've kind of done a good job to fill in the gaps there.
Yeah, that's really interesting. And of course, not having experienced that, I would have no idea about that. You talked about employees. Noreen talked about employees. Why are engaging employees in this process so important and so much part of it?
Yeah, it's a good question. I think it's one of these things where for certainly for employees that have been with the company for a while, it's to Noreen's point, it's an emotional moment. Even though you're not actually there, the company's taking a step into a new kind of level of maturity. And it's a special time for that reason. The work that you've put in over the course of potentially many years is actually coming to some type of fruition, if not like an endpoint, sort of a new next stage or a new beginning. And I think that that's very meaningful. And then for new employees, it's something where you have an opportunity to really engage people, and it's a cultural event for the company that people can share and commonly experience. So it gets people excited, it gets them pumped up. We actually did a huge employee branding campaign where we took billboard advertising out. We're actually based, the headquarters is in Tel Aviv. We blanketed Tel Aviv with billboards thanking our employees for all the hard work that went into to building SimilarWeb to the point where it is right now. We ran campaigns in London and in the Boston area as well, just because we have offices there. So it really is a great opportunity to engage employees and thank them for contributing everything that they've contributed to the success of the company.
And it really, it's amazing. And, I talk about this a lot in my book, how important employees are. And this is so new to me, not having gone through the experience. Of course, they'd be important. But really, it sounds like in the case of SimilarWeb, they really looked at it as a way of engaging them. Okay, when you and I talked a few weeks ago, you talked a lot about the roadshow and the roadshow video and how this has become its own art form. Can you talk about that and the process that you went through to get yours together?
Sure, absolutely. So the roadshow video, for those who aren't familiar with it, is basically a 25-minute plus high quality video that tells the story of the company. It used to be, this is another thing that's changed, I think, over the last few years and really evolved over the course of, the last 5 or 10 years. It used to be this kind of fairly set format. It kind of progressed along the same structure as some of the decks that you create as a result of going through the IPO process for equity analysts and things like that. But what it's evolved into is much more of a storytelling opportunity. So we've moved away from this like CEO talking head, shifting to the product owner talking head, shifting to the very boring part at the end with the CFO talking for 10 minutes about the financials, to really something that is much more of an opportunity to engage and storytell and explain the company and the personality of the company in a much more compelling way. So this is a pretty big video. 25 minutes of high quality production is a lot. So you have to plan ahead. You have to think strategically about who your speakers are going to be, the people who are internally representing your brand, the executive team. You might want to have other people who are not on the executive team, employees, depending on how you want to work it. You're going to script out the whole thing, and then you're also going to capture more candid footage and splice it together in interesting ways. Customers, got to bring them in and line them up and get them ready to speak on the video. That can be something that's really a challenge because, particularly with COVID, operationally difficult, but also getting a customer to step up and say, we believe in this company and the value that they represent, and do it in this type of a high profile format. It's potentially a big lift. So it's something you really need to plan ahead to do. And also, of course, you got to hire the right company to help you out with it as well.
Yeah, I was going to ask you about that because this is a very specialized thing. And I imagine the people who do this like they command big bucks.
Yes, for sure. It is a high ticket item. It luckily doesn't normally, at least in my 2 situations, hit the marketing budget. It hits the IPO budget. But it's a big ticket item. And there are a number of companies that do this and specialize, but it's a limited number. And at least with, last time around, you mentioned how many companies have gone public in the last year or so. Activity level super high. Is really hard to find the right company that had the bandwidth to actually get it done. I think I can just speak for our experience. I'm really happy with how our video turned out. But again, you have to work with the right people, and I think we managed to pick a good company to work with.
Yeah, and obviously, it is a specific type of storytelling, if you will, and I just would imagine that it's so different and you do it so rarely in your career that it's still, you're relying on experts all the way. I mean, you'd have to, right? I mean, it's not like, in the old days, we used to shoot 30-second, 60-second commercials, and you do enough of them, you can speak up. This has got to be tricky.
Yeah, for sure. I think there are a lot of different inputs that go into it. It gets a lot of scrutiny from the entire executive team, certainly, who are all, in some cases, in our case, themselves participating and speaking. But having good expert advice, good creative capability, part of it's that art of storytelling. And I think,
Sure.
Some of it you bring with you, and then having some outside help to really kind of help you drive it is a huge asset.
So I'm imagining that there is an endless list of things that one needs to do in preparation, and at the same time, you are still on the hook to drive demand for the organization as the head of marketing. So I'm wondering how these two, it's almost like you have two jobs. How do you sort of manage that, those two demands as you're going through it over the 9-month period in your case?
Yeah, sure. So I think, to your point, the business has to run, right? We have to drive demand generation. If anything, it's more important now than ever that you're delivering consistently, you're hitting the plan. And I think to a certain extent, the IPO related activity, and there's Noreen touched on a lot of the things that need to happen from a deliverable standpoint. Those things have to happen incrementally. It's in addition to. And so as you go through the process, it really is a situation where having a great team around you becomes incredibly important, because in this situation, you end up leaning on people, your direct reports, other people around you, the executive team. You lean on them more than you normally would, just to make sure that the day-to-day is operating smoothly. So
Right.
I've been lucky to work with two great teams through the two processes that I ran. But you have to have those people who you're comfortable handing things off that normally you might kind of take on yourself.
Very cool. Okay. All right. We're going to transition here for a second, because this is the moment where I am going to plug CMO Huddles. We launched CMO Huddles in 2020. It's an invitation-only subscription service that brings together an elite group of CMOs to share, care, and dare each other to greatness. One CMO described Huddles as timely conversations with smart peers in a trusted environment, while another called it a cross between an expert workshop and a therapy session. If you're a B2B CMO that can share and care with the best of them, visit cmohuddles.com or send me an email to see if you qualify for a guest pass. So Noreen, having been in CMO Huddles for a while, does that description sound about right?
Absolutely. Yeah, absolutely. It's been wonderful. It's been just great to connect with peers across so many different industries to share ideas, whether it's around things like org structure or new tools we're implementing, or just dealing with different seasons, things like this, like prep for an IPO. It's been incredible. It's really been helpful. I get so much out of the sessions, and I'm often tapping into the community to just get ideas for vendors and different solutions. It's been really, really helpful.
Yeah, we love your being active on Slack and all those things, because that really is, it's an amazing network. I know, Kevin, you're very new to Huddles, so I don't know if you have an impression yet.
I have no impression yet, but the concept to me is amazing.
There we go. All right. Well, that's all very cool. We have some recorded comments that we're going from some other huddlers. We're going to play that while the three of us go grab our gin and our chilled glasses. So stay with us.
A smart person learns from their mistakes. A wise person learns from other people's mistakes. There's great value in the CMO Huddle.
This one has consistently brought value to the table. There's value at every step.
The continuity of familiar faces is also quite nice. You can start to form some deeper relationships.
It's a nice break in your week from a lot of other meetings.
None of us is as smart as all of us. Every huddle I go away with one idea that I didn't know before.
We have implemented a number of things that have made a significant amount of difference.
It's a really high caliber group of very
passionate CMOs.
Share these best practices, but do it in a circle of trust.
It's an amazing group of people.
Jackie has constantly reminded me that we need a call to action on everything we do. So if you are a CMO that can share and care and dare with the best of them, visit CMOHuddles.com. How's that for a call to action, Jackie? All right. So Melissa is going to lead us in this tasting. Melissa, our producer, what are we doing here?
Hi, everyone. Welcome to the tasting. I hope your gins are nice and chilled. It's the best way to taste them without a mixer, I think. So today we have 2 London dry gins. One is it's the classic Tanqueray. It's US's most imported gin. And it was founded by Charles Tanqueray in 1830 in Bloomsbury, London. So he was one of the first to ever pioneer the London Dry, and he was the son of 3 generations of clergymen. But he decided to go a different route and pursue gin distilling. So first we're going to taste the Tanqueray. You can go ahead and pour a little bit into your glass. Just so you know, Tanqueray is now owned and produced by Diageo. It's one of its main brands. And the recipe is a secret, but they do reveal 4 botanicals, which are the typical botanicals you would see. So this is going to taste pretty juniper heavy. It has juniper, coriander, angelica root, and licorice.
It's funny because the angelica root and the licorice sort of push it in the same direction. Mm-hmm. It's funny because you never have Tanqueray like this. It's almost always in a G&T. And so it's really interesting. I don't know. What do you think, Kevin? Noreen?
Really good. Same, Drew. I have never, as I sipped it, I was like, I don't think I've ever done a shot of Tanqueray or Tanqueray on its own. I love a Tanqueray and tonic. That's like go-to summer drink. But really good. Yeah. It's really, this is new.
Yeah. It's definitely a little bit odd drinking it without the benefit of other stuff. I'm kind of a whiskey drinker normally myself, but it's interesting drinking it straight.
Yeah. It's a London Dry. So the requirement is that it can only contain 0.01 grams of sugar. So other gins would typically have some more botanicals distilled in afterwards, or they would have a bit more of a sweetness to it. So you could drink it without the tonic, just from a few that we've tried.
Yeah, we got to get you some Old Tom, Kevin, because there's a couple Old Toms that are very close to bourbon. You barely tell the difference. All right, we got to try this one. And first of all, folks, the bottle. I want you to see the bottle. It's this. Look at that. First of all, the color is intense. And look at that. It's quite unique. Okay. What do we know about Empress?
Okay, this is Empress 1908. It is distilled in British Columbia in a town or city called Victoria. Sorry to anyone in Victoria, depending on how big you are. Victoria has a hotel called the Fairmont Empress Hotel that opened in 1908. It was a very popular tourist destination, and it looks over the harbor in Victoria. And this hotel was famous for its signature tea blend, which is one of the 8 botanicals in the gin. So as you can see, it's a really pretty color. And we're going to bring on Nicole, our botanical expert, to talk about the botanical that makes it the color that it is.
Hello, everyone. So for today's botanical, we're actually talking about the butterfly pea flower, which is natively found in South Asian countries and is revered as the holy flower in India. It is also used as a natural food coloring, which is why it gives Empress 1908 that lovely color that you saw. Fun fact, if you were to add a carbonated mixer, like a tonic water, it will alter the gin's pH levels and it will turn it pink. So that would be really cool to see.
Wow. I didn't realize that. Add tonic and it turns pink. I have to say, this is a completely different experience tasting this gin. I mean, I don't know about you, Noreen and Kevin, but it feels different in the mouth. That has different flavor profiles. I would describe it as more complex, almost, there's a lot more going on.
I would agree that you said there was some tea aspect to this. Tea is one of the components. I think you can kind of taste that a little bit.
Yeah, this is also used for teas, and I think it's very popular now with the beautiful color and how you can change the pH levels depending on what you add. It's very, very interesting.
It's like a magic trick at a bar.
It's a great party trick to change your drink from blue to pink, for sure.
Well, Melissa, is there anything else we need to cover when we talk about these gins? Anything else you had on your list?
Yeah, just the last thing for this gin, if you want it to keep that purple color, since it's an organic color, you need to keep it in a dark place. Otherwise, it can dilute the color of it. And taste-wise, you should taste a bit more of a citrus taste. So definitely does have a difference, even though they say it's like a contemporary twist on a classic London dry.
I have to agree. And I did, by the way, took the liberty of trying this last Friday night with my Friday night martini, and it was spectacular. So if you are a martini drinker, I definitely would go with the Empress. It's just because it stands up to a martini quite nicely. So there you have it.
Did it stay blue or did it change color for you, Drew?
It did not change color. It stayed the blue. The vermouth did not have an impact.
Yeah, you need a carbonated drink.
Carbonated mixer.
Give that one a go.
Not going to do that.
Yeah.
Don't like to do that. All right. Well, thank you, Melissa and Nicole. That was awesome.
Thanks, everyone.
Bye.
All right. So we are back and we are talking IPOs. We had Noreen, you're very popular. Both Chip and Gabby and Rachel all chimed in and said they want your list. So we'll have to, of the characteristics, and I believe it was the characteristics that you sort of identified of the what made these videos good. So and it probably be between the two of you, you'd nail it. Okay. So we talked a little bit about the demand gen, but I haven't had a Noreen. You had a lot of time. You had the 2 years to get the sort of brand together, but talk a little bit about in the last 6 months, I'm imagining it's all IPO all the time.
Yeah, absolutely.
So how do you deal with that? And how did you deal with it? Because you got to keep the business running.
Yeah, absolutely. So, so ahead of time, you've got to have that revenue engine cranking. Like you've got to have that predictable revenue engine cranking before you even start this process, right? Because another big part of it is you have to be able to communicate to investors all of the metrics. And this is another area where you can go and pull numbers from other companies that have gone public to get comps from others in the industry on all the different marketing metrics that they use to evaluate a company. But the marketing metrics are a big part of it. And investors want to be able to evaluate the health of that revenue engine because they're thinking about if I'm investing money in this and we're this company's getting a capital infusion, what are they going to be able to generate and in what time period? And so that is a big part of it. So you want to have it in place ahead of time. You want to have a strong leader, and you want to have a strong leader that if you as CMO have to take your eye off of that for a period of time to go heads down on IPO prep, you know that revenue engine is going to continue to crank. And so, so I think as Kevin said, it really comes down to having strong people around you. We tried to sort of ring fence a team of folks that were focused on the pre-IPO activities, so we weren't disrupting the entire team. So we had a few people that were involved in, there were so many decks that we had to prepare in the months leading up to the IPO for different investor days. And, we did a non-deal roadshow and some other things months in advance. And so doing all that deck work and then working with all of your executives to prep them on media training and presentation training and really getting them good at delivering that company pitch, that company narrative. So I was spending a lot of time on that. And I had a couple of people on my team really helping. But then I had a lot of other people on the team that just kind of kept the business going. And so I think having strong leaders in place during that period so that the business is going to keep going and you'll have the time and the cycles to spend on the IPO activity.
And if listening to you on this, one of the things that I really want to dive into is metrics, but I'm going to ask Kevin that, and then we'll come back to you. So it's interesting because we know how difficult it is to have a perfect metrics engine and perfect ROI attribution and predictability. So I'm curious, Kevin, and since you did this recently, what metrics did you sort of concentrate on, and that were the key ones that became sort of part of the sales presentation, if you will?
Yeah, it's a good question. I think every company is probably different in terms of what they want to emphasize as part of the key measurables that they want to talk about as part of an investor pitch. Thinking about how we positioned, a big part of our strategy has been attracting people at the top of the funnel with really interesting free offerings in terms of measurement data and insight into activity that's happening in the digital world. So, we presented some data around the usage that those capabilities were getting on our website. It's one of the things that we looked at. Basically the monthly users that were returning to our website to use those free tools over and over again. And then we talked about the typical metrics, the typical funnel metrics. The lead conversion, the value that we were driving into pipeline. You're always a little bit cautious about how much detail you're giving the investor community about these things, in particular because you don't want to get into a situation where on an ongoing basis you have to continue to position these things. So for us, it was about describing the strength of this demand generation engine and the efficiency of it and how it operated and the relatively low marginal cost of pipeline creation that it enabled for us. But we were careful not to get into a situation where we need to kind of update the street on an ongoing basis as to how that whole engine is performing. In particular, because like anything, it evolves over time.
Right. And that's interesting. And I didn't realize it was a freemium model. And so really then marketing is how many people can we get to the free product, and then X percentage of those we're going to convert, and we're going to convert them in a consistent manner. So in a manner. So it feels like you can create somewhat of a predictable thing because from past data how many of these free customers become paid customers, right?
Yeah, absolutely. Yes.
Okay. So as long as you keep getting free customers and as long as you keep converting them at the same rate, you're going to grow. And that's a relatively easy thing to wrap your mind around. Noreen, I don't think your model is the same, is it?
No, it's not. It's not. It's more of an enterprise level sale.
So let's talk about the metrics that you were focused on that could get you to a predictable revenue stream, at least in the minds of investors.
Sure. So we looked at, we reported on a variety of metrics, things ranging from CAC, your customer acquisition cost, your CAC payback period. We measured sales and marketing efficiency ratio that shows the fully loaded sales and marketing expense, including headcount, and measures that against increase in revenue. We also look a lot at DBNER, dollar-based net retention rate. That measures how your existing customer accounts are growing, which is really big for our business. We also looked at things like the percent of revenue that was spent on sales and marketing to just and sort of put all of these things together to tell a story, to show that at the time our percent of revenue spent on sales and marketing, when you compared us to, we looked at the last 50 companies to IPO before us and compared our numbers to theirs. And on a relative basis, we were not spending nearly as much on sales and marketing, but we were showing, hey, we're not spending as much on sales and marketing, but here's what we've been able to do from a revenue growth perspective and an efficiency perspective to paint the picture that if we add dollars to this and fund the sales and marketing engine, you can expect that because we're operating so efficiently, we're going to continue to really scale this. And so those were some of the numbers that we used. But I'll tell you again, for this, to really figure out what numbers were most meaningful, this is also where pulling the information from all the companies that went public previously. And it's funny because Kevin's company, Appian, went public just a couple of months before Bandwidth. that's one of the companies I studied most carefully. And so watching the roadshow video, watching the deck, pulling all the information.
I hope you think we did a good job.
You did. Yeah, right away when I saw that, I was like, oh, how cool. We're talking about IPOs and I studied your IPO. So yeah, I'd encourage folks that are thinking about this. And the important thing too is no matter where you are in your life cycle with a company, if you're not public yet, and most tech companies have their eye on some sort of an event, fundraise, M&A activity, you should be acting as if you're on the way to get there. So working on the strategic positioning, working on getting that predictable revenue engine in good shape and really cranking, getting all the metrics dialed in and making sure you have a really strong analyst on your team that can report on all of that, looking at how other companies report the numbers and how you match up. The earlier you start really getting rigor around all of that, the better positioned you're going to be, so that if, like in Kevin's situation with his new company, if it's, hey, we want IPO in 9 months, you're ready. You've got the foundation in place. You've got the team in place.
And what I love about that is that even if you don't do an IPO or have some other thing, why wouldn't you want to have a business that had a predictable flow, right? Why wouldn't you always want to have those metrics in place that you have agreement on, right? That we can look at our business and we can share. And it's just so funny that often it takes an IPO or some sort of thing to kind of, in many ways, do the right thing, right? And another thing that sort of, as I'm thinking about it, and you're dealing with the fact that you were underinvesting in marketing, but still getting really good results. And so give us this IPO, an extra $80 million. And look, if we spent some of that in marketing, imagine how much more we could grow. That's a great story. But on the same hand, you wonder why you couldn't just go to your CEO and say, hey, we could spend more money and grow faster.
Yes.
I'm just wondering. But anyway, as you're listening to this and you're thinking about planning for this, I suddenly am thinking this show is so relevant to any CMO who wants to be in a position to show value.
Absolutely.
Well, what am I missing here? You guys have both done it. And so your next job, you go and they're not planning an IPO. Why wouldn't you want to have all the things that you just talked about in place?
Yeah, I think it goes back to Noreen was saying earlier. She's been with companies and brought them through this phase of growth, and I think that's really what it's all about in terms of creating, taking a product that has a good fit to the market and has customer value, and helping to create the marketing engine around that to enable you to get to that level of predictability. And when I say engine, I really mean engine in the sense that it operates. It's a machine. When you add more input to it, it performs at a higher level in a predictable way. And I think that's really the phase of growth that we're talking about in this sort of around 100 million ARR type of company, where you're thinking about at the very earliest stage going to become a public company. That's the motion that you want to get into, where you have that predictability of incremental input delivers predictable output.
Yeah, I mean, and I could even go further back to that where Noreen started with this, which is you need a clear point of difference to define the brand in a marketplace so that investors and analysts and then investors will in fact reinforce the fact that you are a distinct brand in the marketplace, which to me is what all CMOs need to do anyway. So it's just, again, interesting that these are steps that are must do in an IPO, but I would argue maybe you want to all do. But okay, so the good news is, and I think there's a certain amount of folks that are sort of salivating and looking at this and saying, oh my gosh, the cash, the personal wealth creation that an IPO might add to that is the payout good here as a CMO? I'm not asking you to put, I'm sure there's probably on public record, but is this worth the extra working double time and 2 jobs over the course of a 2-year period or 9-month period?
Yeah, I'd say it is. It is. It's going to depend on when you join the company, right? The the equity you get really depends on the value of it, on when you join the company, what the cap table looks like when you're coming in. But if you come in at the right time, and if you get the right equity on the way in, yeah, it's definitely worth it. And then I think there's getting across the line with the IPO. So now all of a sudden your options have value, but then it's companies will typically then do grants of RSUs, restricted stock units, to keep you incented and motivated. And so it just becomes another vehicle, compensation wise. And so yeah, I think it's definitely worth the hard work, all the extra effort, and just super motivating and fulfilling. I think to get to that point, to help to get to that point as a company.
Yeah, I think I would just I would add, like any liquidity event, right? It's potentially financially rewarding, and I think with an IPO, it's a little bit different than an M&A sort of an event, an acquisition, because you should keep in mind that there are ongoing restrictions on how you can actually take advantage of the value of your equity. You have restrictions as a company executive, as an insider, in terms of what you can actually do and when you can trade and things like that. And you should keep that in mind, because from a liquidity event perspective, an IPO is just very different than other types of transactions. But I would agree, even from an experiential standpoint, going through the IPO process, it's an amazing process. It's super intense, but you really get to build connection and relationships with people at sort of the next level in terms of who you're working with, because it is so intense and you're working so closely with them to get through the process. And then you have this amazing experience at the end, which is kind of like the exclamation point on it all, where you're standing on the floor of the New York Stock Exchange, or you're pushing the buzzer to open up NASDAQ, and it's just an amazing day.
It sounds like it. Well, and on this show, of course, we always have to ask the question, what would Ben Franklin say? And that's just a quirk of this show, but he does have one after you've gone through this, he would say, wealth is not his that has it, but his that enjoys it. And I think what Kevin was saying is, you don't necessarily get to enjoy it right away, but it's there. It's there. All right. So, what changes now? You're public. What changes from a marketing perspective in terms of what you're doing? And, one, you'd think, okay, we have more budget, but is there more scrutiny? Do you have restrictions? What changes?
I'll take a crack at it.
Sure. You go for it.
I would say, I can speak from my perspective. I would say, in some ways, not much changes in terms of your role. I think in a lot of ways, the best IPO is the one that's the least disruptive, where the vast majority of your employees don't really feel it. They just stay focused on the normal execution, and then when the day comes, they get to experience it, and then they go off and they continue to execute in the normal way again. There are some changes that happen, a little bit more overhead around quarterly earnings. You have to take care about how you put certain types of information out there. You probably spend more time with lawyers after the IPO than before. Well, I mean, with the exception of the run-up, through the IPO process and after the IPO than you did before the IPO process. But for the most part, your day-to-day, my perspective is it's pretty much the same.
Noreen?
Yeah, so there definitely some things stayed the same, which is nice. But I'd say a lot more rigor on the legal side of things, just having to be very careful about anything we put out. We were in a good rhythm of having everything reviewed by our legal department ahead of time, but a lot more rigor around that. And then being mindful, of course, of quiet periods, continuing to evolve the positioning and messaging of the company as the market changes, and staying on top of that. Marketing plays such a big role in that, in just shaping the perceptions of the investor community, and really staying on top of that in a dynamic market is big. And then forecast accuracy is really big, of course, when you're having to guide the street. So partnering closely with sales on that and trying to build pipeline and making sure that we're in a good position from a forecast perspective. So, the stakes are higher. You have to be a little more careful with what you share internally with employees. Like, we were always so open and transparent about everything, and we still try to be, but we've got to be more careful now as a public company. And so those are some of the things: more rigor, more sort of checks and balances, and just competing in an environment where the stakes are higher, right? Like, you can't, whereas before it's like you could make big swings and think, we're going to get here forecast wise. And now we've got to be a lot more careful and diligent on things.
Yeah, unless somehow or other you work for a company that just decides you're not going to put projections out there, which I imagine is really, really hard to get to. So, all right, we have CMOs who are at companies that are thinking about this or there. What are your final words of wisdom in terms of for CMOs who want to go through this? So, Kevin, let's start with you.
Yeah, so I think I would just go back to probably what I was saying a little bit earlier. It's an intense process, but it's a lot of fun. And in the day of IPO itself is a unique experience. It's a once in a lifetime kind of experience. It also gives you these opportunities to build these amazing relationships with your executive team, especially the CFO and the CEO who you work with very closely throughout. And I found it to be both times around just a lot of work, but totally worth it. And I encourage everybody to go for it.
Noreen?
So what I'd say is, if you're a CMO, you're with a company and you're sort of hoping that IPO might happen at some point, don't just sit back and wait or expect it to happen. Wait for it to happen, expect it to happen. Understand that in your role as head of marketing, you can be in the driver's seat here. You can absolutely shape the outcome and the direction for your business. And so I'd advise everybody to act as if an IPO is coming. Get your revenue engine in place, get your metrics dialed in, and have all of that together. Start getting the rhythm of putting slides together that show all of your progress, pull comps from other companies in the industry, really focus in on your positioning, carve out a unique differentiated position for your company. Show that you're connected to a growing market, really get that pitch deck, maybe like an 8-10 slide pitch deck together, and continue to work on refining it so that your company is in the position for an exciting outcome, whether it's raising money, whether it's M&A or IPO. But we're in the driver's seat in marketing. We can influence so much of this, I think, and we're just in a position of such influence in the organization throughout the whole org. And so it's, I think, embracing the power of our role and making it happen.
I love that advice. I can't think of anything better, because what could go bad as a result of that? You are forcing your company to think about being distinct. You are putting in metrics in place to monitor the success. You're trying to create a predictable outcome from marketing. You're working with your executive committee to shape the story of the company and how you would be measured. I mean, where's the downside in this approach? So this has been so enlightening for me, and I know the audience watching live, and when they join us on the podcast, will get so much value out of that, and probably a lot more than they might have expected, because we just heard your new approach to your job. Prepare for an IPO, whether you're going to have one or not. Noreen, Kevin, thank you so much for joining us. It's really a pleasure having you both.
Thanks, Drew.
Thanks, Drew.
It's been great.
And so in 2 weeks, join us. We'll be having another B2B books and beverages. We'll be talking about Renegade Marketing, my new book. We'll be talking about a book from John Miller, from, a bunch of Kimberly Whitler and Jennifer Davis. All right, cue the music. Renegade Marketers Live is produced by Melissa Caffrey. Our intern is Alex Smith. Our botanical expert is Nicole Hernandez. For show notes and past episodes, please visit renegade.com, home of quite possibly the savviest B2B boutique in New York City. I'm your host, Drew Neiser, and until next time, keep those renegade thinking caps on and strong.